And then we go in the center of page 114, common exclusions for coverage. So we get to a new heading here, common exclusions from coverage. Now, before we get into this, what I'll mention to you here is exclusions in health insurance are sometimes referred to as impairment riders. Impairment riders. Okay? So exclusions, they call exclusions in life insurance, but these are things that are never covered. Sometimes in health insurance they refer to exclusions as impairment riders. Okay? Then we have this heading there, pre-existing conditions. Now, again, this is something you're probably going to have a test question on your exam. And when we talk about this information right here, this relates to any type of health insurance policy. Okay? Now, by definition, we have pre-existing condition is anything you went to the doctor for, took prescription drugs for, any diagnosed medical condition that you have is a pre-existing condition. Now, why are we getting into this? Why is it important? Well, remember, if you're buying your insurance, the insurance company does not want you buying insurance for a condition you already have. Okay? So, kind of relate this maybe to where you might understand a little bit better. Auto insurance. Say I don't have auto insurance, and I get in an car accident today. Can I buy auto insurance tomorrow to cover my car accident today? No. Does that make any sense? No. Life insurance. I don't have any life insurance. I die today. Can my wife buy life insurance to cover my death today, tomorrow? No. Well, a lot of people on the health insurance side might have medical conditions that they try and obtain coverage for after they find out that they have a medical condition. So this is what we refer to as pre-existing conditions. This is any condition, medical condition you've had, you went to the doctor for, took prescription drugs for, that's diagnosed prior to buying the policy. The insurance company does not want to cover your current medical conditions. They only want to cover new medical conditions that occur during your policy period. Okay? So remember, this is adverse selection. They don't want to sell insurance to somebody who's already going to have a claim. Okay? It's not fair from their standpoint. So we have pre-existing condition, anything you went to the doctor for, hospital for, yada yada, before the policy went into effect. Now keep in mind though, with underwriting, and this comes into effect a lot more in individual policies, with underwriting you're going to have to, on an individual basis, you're going to have to go to do a physical exam most likely, right? You're going to have to fill out a medical questionnaire. The insurance company is actually going to do a background check on your health from what's referred to as the Medical Information Bureau. The Medical Information Bureau is a nonprofit organization that was created by life insurance companies in the early 1900s to keep track of people's medical conditions. So when you go to the doctor, you go to the hospital, everything that you went to the doctor for, went to the hospital for, that you're submitting an insurance claim on, is reported to the Medical Information Bureau. Okay? So when you apply for health insurance and they're asking you about your health conditions, and you try and hide something from them, it's not going to work. Because the Medical Information Bureau, that report, which the underwriter is going to obtain a copy of, if that doesn't match up, then they're going to figure out, well, that you're lying to them, right? Okay? So we have there the pre-existing conditions heading there, and it really relates to this. What's referred to as the probationary period. Also referred to as sometimes the pre-existing condition exclusion. Okay, so the probationary period or pre-existing condition exclusion, this is a period of time from when the policy is brand new, which is usually, for most policies, a maximum of 12 months, that you're on probation. Now, keep in mind, you see this a lot more in individual policies. Group policies usually don't have probationary periods. However, they could, but for the purposes of this presentation here and as far as the exam, I would think of this as an individual. This is an individual policy where the person's got a probationary period. What is this probationary period? It's a period of time that starts when your policy is brand new. So this star right here is going to represent when the policy first started, the date the policy went into effect. For a maximum of 12 months, the insurance company can impose a probationary period on me. Now remember, this could be in any policy: dental expense, medical expense, disability income, long-term care. It's a period of time I am on probation for pre-existing conditions. Now, under federal law, which these probationary periods are regulated under federal law, and the federal law that regulates it is known as HIPAA, and that's just the name of its Health Insurance Portability and Accountability Act. So this is the acronym, but it's a federal law acronym referred to as HIPAA. This law primarily regulates these probationary periods. So when I say it's a maximum of 12 months, it could be less than that, and they don't have to impose it at all, the insurance company. But when they're within their rights to do so, they can impose up to a maximum of 12 months, maximum under this federal law, HIPAA, which we'll talk about a little bit later. Okay, so maximum 12-month probationary period. I'm on probation for any pre-existing condition that occurred in the prior 6 months. And this prior 6 months is referred to sometimes as the look-back period. So the look-back period is the prior 6 months before my policy goes into effect. And this is where my pre-existing conditions come from. Any pre-existing conditions that occurred here in the prior 6 months of the policy that reoccur here during the first 12 months that I'm on probation do not have to be covered. Okay, so in reality, what's the insurance company protecting themselves against? A person who fills out an application for their health insurance and lies about their conditions, health conditions, and the insurance company doesn't find out about it. Okay? Now, keep in mind though, if they find out about it, what are they going to do? Well, they'll add an exclusion or impairment rider to the policy, or they'll charge extra premium for it, or they might not write the policy at all, right? I mean, that's the choices the underwriter has. If they find out, if you tell them you have a medical condition, they can either exclude it, issue an impairment rider on it, charge an extra premium, or not write the policy at all. So what's this for? This is for, I lie, I don't tell the truth, and they don't find out about it. And the policy gets issued. So let me give you an example here. Okay, we'll say 3 months prior to getting this policy, I had a heart attack while I was down in Mexico on vacation. And I went to the hospital down in Mexico, and they took care of me and fixed me up, and everything's better. And I paid cash for my visit down in Mexico. Now, I want you to understand this. If I pay cash for medical care, even if I'm in the States here, if it's not an insurance claim and I pay cash for it, it's not going to end up in the Medical Information Bureau report. Okay, it won't. Okay, so I had this heart attack when I was down in Mexico. Paid cash for it. This was 3 months before this new policy I purchased went into effect. And we'll say that it's a medical expense policy. Okay, so it covers doctors and hospital bills. Now, it's an individual policy, and it's the first medical expense plan that I've had in 5 years. Why did I buy it? Why do you think I bought it? Because I had that heart attack. Okay, and I'm worried I'm going to have another one while I'm here. Go to the hospital, very expensive. So I buy this policy. Okay? Okay, so I go do a physical exam, everything looks good, they pull an MIB report, they don't find anything on there. I don't mention anything about that heart attack I had down in Mexico. Policy gets issued. No impairment riders, no exclusions. 3 months later, bang, another heart attack. I go into the hospital. Now, this is a little strange, the insurance company thinks, because I'm only 33 years old. I think, well, geez, this guy's had a heart attack, he's 33 years old? You know, it's not really making a whole lot of sense. So I've got this policy, though, that's in effect, and I turn the claim in, $75,000. Now, what's the insurance company going to do? As we'll learn a little bit later on, the insurance company has the right to do an investigation. Okay? So I turn a claim in that large, they're probably going to do an investigation in my situation. And in doing so, they find out about this little mishap back here down in Mexico where I had my heart attack. Is the insurance company going to cover this new heart attack? No. Why? That's a pre-existing condition. Now, I'm in my probationary period. They don't have to cover it. Now, what could they also do, though? What's the insurance company going to do? They're going to void the policy. Why? Because I made a material concealment, which could be considered fraud. Now, if I make a material concealment, which is basically a concealment hiding something from the insurance company, and it's important to the underwriting decision, the insurance company can void or rescind the contract. Also, if I commit fraud, either one. So they say, okay, Scott, well, it's not covered because it's pre-existing and it happened during the probationary period, and beyond that, this is fraud, so we're going to rescind the contract. We're not going to cover you at all. So who's on the hook for the $75,000? Me. Okay, I am. Now, let's change it around a little bit and say, instead of a heart attack, say it wasn't something, major. Say that I had an asthma attack. Okay, so we'll say AA. I had an asthma attack 3 months prior to getting the policy, and I went to the hospital, and we'll say I've never had asthma. Okay, so now I find out that I have it, but I've never had an asthma attack in my entire life. I had no idea that I had asthma. I have it, I go to the hospital. Now, I forget to mention that, though, to the underwriter when I'm filling out my application. I forget to put it on there. I'm not trying to commit fraud or anything. I just completely forgot about it. And when they pull their underwriting report, the MIB report, it's not on there. Now, remember, MIB report's like a credit report. Is it always going to be 100% accurate? No. Okay, maybe there was an error, it didn't get reported for whatever reason. Or, in reality, possibly, there could be things on there that never even happened. Okay? So, say my asthma attack's not on there. Well, they put in a probationary period on me. I have an asthma attack 6 months into that probationary period. Is it covered? No. Are they going to rescind the contract? Probably not. I mean, I didn't commit fraud. I mean, they would have to prove that I committed fraud, intent to deceive on purpose, and I didn't. So they can't prove it. They're probably not going to rescind the contract. But they have this built-in coverage there where if any asthma attack I have that occurs during this first 12 months probationary period is not going to be covered. After the 12 months, though, what if it happens out here? Covered. It has to be covered. Pre-existing conditions that recur beyond the probationary period must be covered. So the probationary period is a maximum of 12 months. Some policies, which we'll talk about later, maximum 6 months. But an individual policy, maximum of 12 months. And most policies, maximum of 12 months. Excuse me. However, if that pre-existing condition occurred beyond that probationary period, it has to be covered. Now let me go back here. Let's say I had some issue with my shoulder, which occurred prior to this look-back period. It occurred prior to the look-back period. And I tell the insurance company about that. Okay? It happened prior to the 6 months. Can the insurance company exclude that if it recurs again in the policy? Yes. They can exclude anything they want, for the most part, by issuing an impairment rider. Even if it's beyond that 6 months. I mean, it could be something that happened when I was a baby. If they don't want to cover it, they can exclude it. So I say, hey, I had some injury to my rotator cuff, 3 years ago, and then I had surgery a year after that, and I haven't had anything since then. Could they issue an impairment rider on my policy related to my shoulder? Yes, forever. If they issue an impairment rider, that means it's never covered as long as I have the policy. Okay? Now, one other thing, the last thing I'll mention related to this is pregnancy. Pregnancy can be excluded forever. However, it cannot be excluded as a pre-existing condition. So, let me state it this way. Under federal law, HIPAA, pregnancy is either covered or it's not covered. But it cannot be excluded as a pre-existing condition. Okay, so as far as your exam, they will not give you scenarios and say a person had this happen and they've got a probationary period and it reoccurs here, is it covered or not? They don't do that. You just need to know by definition what a pre-existing condition is. Anything you went to the doctor, hospital, took drugs for, or anything that's diagnosed that occurs in the prior 6 months of the policy going into effect, that's a pre-existing condition. Also, definition, probationary period. What is the probationary period or pre-existing condition exclusion? It's a period of time where you do not have coverage for those pre-existing conditions. Okay? The insurance company created it to protect themselves against people who do not tell the truth on their application for insurance. Okay, so we'll take a look there in the book on 114, fourth paragraph from the bottom. Pre-existing conditions. Almost all new individual medical expense and disability income policies contain pre-existing condition clauses, sometimes called the probationary period, to protect themselves against applicants who do not tell the truth to the best of their knowledge regarding prior health problems on the application. So again, I said it's protecting them against people who lie. For example, an applicant may be on probation for 12 months for any pre-existing condition not mentioned on the application. Highlight, star this is the definition of pre-existing condition. A pre-existing condition is any condition, physical or mental, regardless of the cause of the condition, for which medical advice, diagnosis, care, or treatment that was recommended or received prior to the enrollment date. Pregnancy is no longer a pre-existing condition. They cannot exclude pregnancy as a pre-existing condition. Other words, if the pre-existing condition reoccurs during the probationary period, there is no coverage and will never be during that probationary period. Let's see what else. It says in the next paragraph, not to say applicants on probation for all pre-existing conditions. If the applicant tells the truth, the underwriter will either address this situation by issuing an exclusion or impairment rider, or saying we will cover it right off 100% from day one. Last paragraph, once probationary period is over, all pre-existing conditions, whether mentioned on the app or not, are covered. Unless the insured can be proven to have deliberately attempted to deceive the insurer, in which there would still be no coverage. On the top of page 115, the first paragraph talks about replacement of health insurance. Now, we'll talk about this more in detail later, but if I buy this policy and say I've only had it for 2 months and I switch and buy a brand new individual policy, I'm probably going to have this probationary period in the new policy starting all over from day one. So if I'm going out as an insurance agent or producer and I'm recommending to customers that they cancel their old policy and buy a new one from me, this could create a situation where my customer might have a claim in the new policy I sell them that's not covered, that would have been covered had they stayed in their old policy. So this is referred to as replacement. Now, replacement is legal as long as certain guidelines are followed. However, if I replace a policy to the detriment of my client, meaning my primary objective is to get a commission, that's referred to as twisting, and that's a violation of state law. So this is an area with the pre-existing condition probationary period you need to be careful if you're replacing somebody's coverage. It says in the second paragraph, group policies often do not contain probationary periods, which is a major advantage, obviously. It says, however, due to adverse selection, a lot of insurance companies are now including these probationary periods in group policies as well. Other common exclusions, third paragraph down, include intentionally self-inflicted injuries, injuries sustained by war or act of war, elective cosmetic surgery, treatment in government hospitals or facilities, and participation in criminal activity. None of those losses are covered. Then we get to this next heading, workers' compensation. Now, maybe a test question or two on workers' compensation. Strange because workers' compensation is not health insurance. So, in order to sell workers' compensation, you have to obtain what's called a property and casualty license or fire and casualty license, depending on the state that you're in. Well, why do they have questions about it on the life and health exam? Because some of the coverage in workers' compensation is very similar to health insurance. Now, workers' compensation in most states is required by law, and that employers purchase this coverage for their employees. So it's workers' compensation or workman's compensation. It's on-the-job health insurance, or sometimes referred to as occupational insurance. So it covers workers. They get sick or injured on the job due to accident or sickness. Okay? They become sick or disabled. They can't work. They're going to have loss of wages. Well, that coverage is present in workers' compensation. There's death benefit under workers' compensation. There's survivor's benefits. Okay, so there's a lot of coverages under workers' compensation. Now, two important things to know. Number one, eligibility for coverage is determined by the state, not the insurance company. Okay, eligibility for coverage is determined by the state. Usually the Workers' Compensation Board will determine if you are eligible for benefits, such as if you became disabled on the job. Another thing that's important is what type of insurance is workers' compensation? Casualty insurance. So in order to sell it, you'd have to get a workers' compensation license, which is called property and casualty license, or fire and casualty license, depending on your state. So this is a type of casualty insurance. The coverages are very similar to health insurance. So if a person has a health insurance policy that they purchase from a private insurance company and workers' compensation and they get injured on their job, they might have two policies covering them, is why they bring this up. So remember, principle of indemnity, can't profit from your loss. So the insurance policy will include things that state if you're covered on the job, you're not going to be covered under your policy. Okay, so they don't want to duplicate coverage there. Okay, so under that heading of workers' compensation it says, in addition, most health insurance policies are non-occupational in nature, meaning they cover you off the job only. Most policies state there is no coverage for on-the-job injury or sickness if you're covered by workers' compensation. So a lot of times they just have an exclusion in the policy stating if you're covered by workers' comp, you're not covered by your private insurance company policy. Next paragraph says workers' comp is a casualty type coverage that is mandated by state law if an employer has one or more employees. It is not considered to be health insurance, although some coverage is similar. However, state law exempts certain individuals such as sole proprietors, corporate officers, and partners from these coverages. In the next paragraph it says, so if you're covered by workers' comp, any health insurance you may have is considered to be non-occupational due to the workers' comp exclusion. However, if you do not have workers' compensation and you are injured on the job, your health insurance will cover. This is known as occupational type coverage, since coverage applies to you both on and off the job. Okay, so I suppose I need to give a better explanation of those definitions there just really quickly here before we move on. Very important that you understand the terms here for the exam. So, here's the situation. Where I work, I have workers' compensation. Plus, though, I also have an individual disability income policy. Now, workers' compensation is occupational coverage, right? Covers me by, under this definition, occupational, on the job only. Now, if I have workers' compensation coverage, I do not need this policy here to cover me on the job. In fact, they won't. They will write my coverage in this individual disability income policy as non-occupational, which means I am covered off the job only. Why? Because I don't need coverage on the job. If I get injured, become disabled on the job, I'm covered where? Right here. Workers' compensation, occupational coverage. If I get injured at home, say, again, I go water skiing on the weekend and I get injured while I'm water skiing, I have this policy that covers that. My individual disability income policy. Non-occupational, covers me off the job only. I get injured on the job, I'm covered under workers' comp. I get injured off the job, I'm covered under my disability income policy. Now, let's change this around though. Say I'm a sole proprietor and I have no workers' compensation, but I do have an individual disability income policy. So I have no on-the-job coverage. In this situation over here, they will write my coverage under my individual disability income policy as occupational, which means I'm covered on and off the job. It's two different situations. Remember, we just said workers' comp, sole proprietors are exempt from the requirement. So they don't have to cover themselves under workers' comp. So I'm a sole proprietor. I have no workers' comp, but I have an individual disability income policy, and the insurance company writes it as occupational coverage because I need coverage on and off the job. Now, in this situation, though, my job, since I'm covered on the job, is going to be a rating factor in how much I pay for my coverage. So what's the likelihood that I'll be injured on the job? Well, what do? I'm a librarian. Well, there's very low risk that I'm going to be disabled working as a librarian, right? So yeah, I have on-the-job coverage, but it's not very high risk, my job, so premiums still be pretty low. Well, I'm a race car driver. Well, very high likelihood I could become disabled doing that, so it's going to be a very high premium. Now back over here, where I had non-occupational coverage, they don't care what I do at work because I'm not covered there under the policy. I'm covered under workers' comp where I work. So over here, if I'm a race car driver or librarian, they could care less. because they want to know what I do off the job. You know, do I have any dangerous hobbies? Yeah, I do rock climbing, ice climbing, scuba diving, fire eating, high wire. You know, that's my weekend routine. Well, then that's going to be, you know, a lot of exclusions or impairment riders are going to add to that policy, isn't there? Okay, so you just need to understand the different ways that the coverage can be written related to workers' comp. Okay, bottom of the page on 115. Producer's responsibilities and individual underwriting. It talks about things that the insurance company will do when underwriting an applicant. At the bottom of the page, it goes into field underwriting. The last paragraph on the page, we go into the next page on page 116. And in the first paragraph, it says, it's very similar to life insurance when we talk about underwriting here. Now, what's the insurance company going to do as far as underwriting? Well, the application, right? When you go out to have a person that's interested in health insurance, they fill out an application for coverage. And at the bottom of the application, there's going to be what's called a producer's report or agent's report. And that's going to be questions directed specifically to you as the agent that you're going to fill out. Then you submit that to the underwriter. What's the underwriter going to do? They might request a physical exam, HIV test. We might see an MIB background check done. Well, you're definitely going to see that. Also, a credit report. A lot of insurance companies now are doing credit reports. Well, when you're out in the field, though, taking these applications, they refer to you as the agent as the field underwriter. And as the field underwriter, you're very important because one thing you do that the underwriter doesn't is you meet the person in person. Okay, so you can pick up on observations that you might see and aid the underwriter in doing their job. Now, who determines the rate that the person has to pay? Is that the agent or the underwriter? The answer there would be the underwriter. Okay, so you're a field underwriter as an agent. You're meeting the applicant in person, so you're very important there. But it's the underwriter who determines the person's ultimate rate that they're going to pay for their coverage. First paragraph they talk about in the second sentence, moral risk. Now, we talked about these hazards in general insurance. Hazard is something that increases the risk or chance of loss. We had three of them. We had moral hazard, which is somebody who lies, cheats, and steals. That's what they're talking about here. Morale hazard, a careless person. And physical hazard, such as wet leaves on the sidewalk or a dangerous hobby. Okay, those are our three types of hazards, and they mention that there. Moral hazard is very hard to detect. The next paragraph they mention MIB report. So we said the insurance company will obtain a Medical Information Bureau report. Now, prior to doing that, though, they have to get the person's written authorized consent. Very similar to if they're going to do a credit report. The MIB report, well, obviously a copy of that will be given to the applicant as well. Actually given to the applicant's doctor because it's encoded. So if it gets in the wrong hands, the people won't know what it means. So your doctor has to go over what it means with you. What else they say in the center of the page, 1, 2, 3, 4, fifth paragraph from the bottom, it says entire contract clause. Remember, entire contract clause is policy when it's issued plus whatever is attached, including the application. We'll see that here in a few sections. Mode of payment, you select on your application. That's how often you want to pay your premium. The more frequently you pay it, the higher the cost because of the service charges that they add on there. Third paragraph from the bottom, who signs the application? The insured, the applicant, if different from the insured, and the producer. I'll sign off on that.